Wonderful. Thank you very much. Good morning, everybody. How are you doing? Happy Friday. Still a few more hours to make some money before the weekend starts. Today we're going to go through the technicals and fundamentals. You're the boss. I am simply a humble currency trader that's been around perhaps a little bit longer. And I'm willing to share my experience, things that I've learned, tips of the trade. So please ask questions. So good morning. That's me. That's Wayne. Hot to go, HOTTOGO, says Joseph. Cool. Hey, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that gives traders access to Forex energies, metals, indices, and we're even upgrading our binary option platform for you. I do webinars for clients Monday through Thursday, absolutely free. So if you need a trading buddy, that's me. Just open up an account at TradersWay.com. Simple enough. Hey, demo's okay if you're not ready for live. And by the way, I'm here every Friday at FXStreet.com. But I'm fairly new at FX Street. I've only been doing webinars at FX Street for 10 years. Since I was 5.5. Yeah, only 10 years. But, you know, I'm trying to catch up to the big boys, you know. Trying to earn my keep. So thank you for those that have attended my webinars before. I appreciate your loyalty and support and all the things that you do. I do appreciate that, and I try to pay it back. Let's do a quick review here. Asia. Japan Conference Board leading indicators negative. Fourth straight month of decline. So that's not good. You don't want a negative leading indicator, because that's sort of a basket of economic reports put together, and well, economic indicators generally shouldn't be negative. You know what I'm talking about? How about Korea? +5. 1, 2, you rock. Good job, South Korea. We love you, Samsung. How about New Zealand cutting interest rates? Maybe they're going to keep cutting. Their con falling month over month, down quite a bit. Okay. Food prices. So if you've been hanging with me for a while, you know that every other Tuesday there is an auction for dairy products. You can actually bid on lactose. And I'm like, I'm just totally intolerant to that. So how about cheese and whey and milk and powdered milk? And there's all kinds of interesting things at this auction for sale. And when that number comes out, good or bad, the Kiwi dollar actually spikes or crashes, because they have an extremely high percentage of their GDP that's produced from dairy products. A lot of people don't know that. Pretty interesting. So anyways, dairy products have been in a horrible decline for a long time. And so New Zealand food prices, well, anyways, down. Oops. How do we go back? Go back. Okay. And then here for Australia, okay, one analyst just says that the average price for iron ore to fall another 22% next year. Holy moly. So what are the two biggest exports for Australia? What's the bread and butter for Australia? If dairy is the bread and butter, or let's just say the butter of New Zealand, what is the bread and butter for Australia? Iron ore and coal. Thank you. Wow, everybody's learning something, huh? How many people didn't know that? Come on. Admit it. Come on. Admit it to yourself. Come on. Hey, David, are you brothers with Rick? No, just Enos. Cool. Well, these things are important. Iron ore and coal. This is very important as far as the exports for Australia. Now, should Australia have a trade surplus or a trade deficit in a normal world? Trade surplus would be pretty normal, right? You guys, you should be able to see something. I can't see nothing. So it should be a trade surplus. And, Australia is a fabulous country, very stable politically, right? Very intelligent men and very good looking women. What else? Diamonds, dingoes, wheat, beef, gold, coal, iron, right? So on and so forth. Very, very, wine. Yeah, absolutely. I like your Shiraz. Very peppery, your Shiraz, right? Do they have everything you need except water? If you don't know the history of Australia, just imagine a whole bunch of Englishmen on the back of camels. And they're like, yeah, we're just going to cross Australia. We're going to find like a huge river because every continent has a big river or big, beautiful inland sea. In fact, we're so confident in this, we're not even going to bring water as we cross this desert. We're going to bring whiskey. The English are awesome, aren't they? Yeah, good move, dude. Hey, it's hot out here in the outback. It's hot. So, anyways, they didn't make. Well, that's actually a funny story. So, like 200 guys start out on this quest, and there's like 3 guys left at the very end, right? What's worse than crossing a desert and watching everybody you know die slowly and painfully and horribly? They get to like 10 miles of the ocean to civilization and potentially water. I don't know, not ocean water, but to safety. In the last 10 miles, they have to go through razor thorn bushes. I mean, come on, insult to injury, huh? Tough guys. Well, somebody survived. Then they decided to build a railroad. So, but anyways, when it goes to exports in a healthy world, Australia is exporting all this stuff to other nations, and so you want to look at the balance of trade, that kind of stuff. And then, in particular, if you take iron ore and melt it down, and then sprinkle a little bit of coal in it, it becomes steel. And guess who needs steel in a healthy economy? Yeah, could be China. Yeah. So just think of it that way. China so Australia did pretty well for a while there, right? Even after the economic crisis, right? One of the first economies to recover, right? And what China did was stockpile things like steel, and they started building ghost cities and skyscrapers and bridges to nowhere and railroads to nowhere. They're like, there's going to be a city out here one day. So they built all that stuff, and commodity countries did well. And even though sort of real economies were lame, the commodity prices were still pretty high, right? Do you remember oil at $105, right? Even after the crisis. So China did this as a stimulus to stabilize their economy and build capacity when things were cheap. I guess that was smart, except they said they wanted to build a consumer economy, but then when things got tough, what did they do? They built more factories. Well, I thought you said you wanted a consumer economy. Yeah. Let's build more factories. So now they have lots and lots of capacity, but they're not building anymore. And so iron ore keeps falling and falling and falling and falling and falling. And that's because nobody wants steel. And if you want steel, you can go to India to get steel. You don't have to make it in China, right? So, anyways, that would be bad for Australia. Is what the reason I put this little footnote here. If iron ore falls by 22%, that's like saying, "Hey, we're going to pay you 22% less next year." Now, a human would say, "Well, we're just going to spend less this year because times are going to be tough." What does the government do? Remember, they have two choices: cut spending or no, not the central bank, Justinas. No, not that. That's not the government per se. That's the central bank. Either borrow money because they're not going to have enough revenue to cover their expenses, right? Or they could just cut back. But do governments cut back spending? Not if they can avoid it. Right? Stupid politicians, right? So anyways, German wholesale prices negative, wah, 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 month over month, year over year, negative, wah, wah, wah. Okay, that's bad. German CPI, and I always laugh at this, right? I always laugh at this. Are the economists and PhDs so good and the data that they gather is so solid, they know it's 0.1 and not 0.0 or even negative 0.1? They're really that good? And the data they gather is really that solid? There's no what's the margin of error on this? I mean, just it's so funny, right? They're like, good thing it wasn't zero. Woo! Good job, Germany. You almost hit zero, but thank goodness it came out 0.1. Yeah, all right. So cool. I mean, it is what it is, but the bottom line when it comes to like a macroeconomist, things are not that good in Germany. Okay, that's just not that good, right? Okay, China money supply growing. M1. Who knows the definition of M1? Come on. Cash in hands of the public and come on, cash in the hands of public and how about typing a question mark? Checking accounts. Good job, Alan. Boom, 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 boom. Because you can convert that to cash like that. Okay? Yes. M2 money supply. Cash in the hands of public, checking deposits, and nice. What about gold? Where does gold fit? Nice. It's not cash, though, is it? You got to kind of melt it down or go to a dealer and trade it, or can't really cut it up and go to the grocery store, right? So anyways, increase in money supply does what to a currency? Right. In fact, Milton Friedman says if you take out all the other things, because you can take them out, and we don't need to go in that discussion, right? Right. The quantity of money times the velocity of the money equals the price of money over output. You know, we don't need to get into all that stuff. But what he says is you add more money, you get inflation. That's it. What's a similar thing to inflation? Falling values, right? Because you need more of the money to buy the same thing, so prices go up, inflation, right? So, yeah. And then Chinese foreign direct investment. Oh, what? A lot less money going in month over month. I don't know, or year over year, right? Money not going to China. What's coming up today? Retail sales, whoop, whoop. PPI, right? You want to look at the core, whoop, whoop. I don't expect any inflation out of that, right? Especially with oil prices at 36, but of course, oil wasn't 36 last month, so next month's PPI is going to be bad. Business inventories, holy smokes, 0.1. I love it. University of Michigan confidence. Are the Lutherans up in Michigan confident in the economy? Of course not. And then Wheel speaking today. Yay! Whatever. So, free and clear plan today, right? Not a lot of stuff in your, in your way. So it's going to be a technical day, which is good. So we can focus on that. But we've had amazing news, huh? What a great week it's been. And then next week, lovely. So there's just, a lot going on that's good in the world, and we should celebrate that. Okay? Because it can be a pretty ugly world at times, right? One of the things I like to celebrate is, first of all, we had, I don't know, let me start over again. I don't know if you can see this. There's this little trade plan, trade it back to the 21 with the target going down to, I have it going down to M2. It didn't actually make it, it only got close. Okay, I think there's a psych level in there. But it did come down. And then what? It reversed off the reversal, kind of expected, right? Came down to the moving averages and then went up, which is it's supposed to do. And if you were a bear, what would you do? You're waiting for the retracement back to the pivot, and then maybe back down. So what's nice is what I'm getting at is the market is trading logically and intelligently based on things like technical analysis, right? So you had a lower high, which predicts a lower low. It went in. This is typically the first reversal pivot point at the beginning of the week, which was up here. If you're a bear, the projected bottom for the week is M1 if you're conservative, S2 if you're aggressive. So this idea that it came up to a pivot point, lower low, lower high, bear time, right? And now they're thinking this for the week. Lower low, what does a bear do? Lower high, roll reversal. And you can see I already had this planned out for those that trade with me, right? Again, just open an account at Trader's Way. Fell down, hit the projected bottom. That's what they were thinking here back on Monday and really Tuesday morning. That's what the plan was on Tuesday. So we nailed that Wednesday afternoonish, right? Then what? Well, that plan's dead now. So what does the market do? Right. So actually, maybe I should just zoom in a little bit. Okay. And what does the market do? Well, the bears take profit, right? Of course, we had amazing amounts of news this week. Right. And in fact, involving New Zealand, right? They cut interest rates. But anyways, so a change in fortune. So this is an hourly chart if you look way up here. Imagine this on a 15-minute chart. Up. Now, how many 15-minute candles does it take to create a bearish engulfing or not engulfing, but a bearish candle and a move to the sideways, right? So the first part would have been 15, so 1. And then down for an hour, so that's 5 red candles into this moving average, and then it started up, right? So this little blip here is a 10 to 12 candle move, but all it does on the smaller time frame is this. Okay, works its way up. And should the monthly central pivot point be identified as a potential level of resistance that a bear would be interested in? Right? Even if you're a bull, you should ask, what would a bear do? right? Even if you're a bull, you're buying here. What would a bear do? That's relevant to predicting where the next resistance level is, right? Oscillators. This shows bulls taking profit. That's what that shows. Less and less bulls, not necessarily bears, but less bulls, right? So why would a bear be there? Well, first of all, it kind of looks like a bearish trend, doesn't it? So if you're using technical analysis as your main guide, you're expecting lower low, lower high, lower low, lower high, lower low. Now, how about the change in central banking policy in New Zealand? Would you assume that was bullish, or would you assume that's bearish? Bearish, because they're less competitive for money flows as far as interest rate differentials. Okay. So it's pretty logical to think that there might be bears waiting to sell in this market. Maybe they don't want to sell into the reversal zone, right? I mean, how about this? Do you think somebody was front running the interest rate decision? I mean, I talked about it with our crew right up in here, Monday, New York. We went through the calendar and planned out the entire week. We talked about if you're gonna do it, you need to get in a few days early or a few minutes after the news, right? So somebody played it out, hit the target, done. But now we have the news. They are cutting interest rates. Things don't look fabulous in the Shire, right? The hobbits are starving, right? So there's possibly bears still in the market. Well, where would you sell? How would you analyze this? Now, the very first thing, and I've already done it on this chart, so I guess I don't really have to do it again, but the very first thing is I look at the previous low, I drag that across, and that has super high potential to be the next level of resistance. But you notice it was sort of breached in the actual news event, just because high volume and volatility messed it all up. But whatever, it's still there. What else would you do if you were a bear? You're going to analyze the move, okay? And, right, la-di-da-di, we likes to party. Right there. Monthly central Alamo as far as Fibonacci. Pretty reasonable place to look for a reversal. So how do you pull the trigger is probably the next question, right? See, that's strategy. You say, I've analyzed the central banking policy, and I think this should fall, but it's not falling now. Okay? So your strategy is you're a bear still. Even though this rallied up for a day and a half, right? On the long term, you're still a bear. So what trigger gives you the entry? Because strategy is not entry. What's the tactical entry? One minute reversal, London Open, sell it. Well, I've never sold at support. I think you mean resistance, Luis. Okay, 5A cross. That's kind of the answer I'm looking for. Give me a tactical entry. That's like technical analysis, guys. Not, oh, well, sell at the, what do you mean sell at the London Open? What if the London Open's up? Yeah, 5A cross, presumably down, right? Okay, Jimmy says 1 minute series of lower lows. Thank you. Better answer, right? I think I know what you mean, but maybe you don't, right? So I need to be specific. I need you to be specific. All right, so here we are on an hourly chart. I think this decision could be made on a smaller time frame, right? But let's just leave it here first and foremost. Okay? Bullishness into resistance. Do I sell this? You could. Okay, if you wanted to buy, you can only buy here, which is an easy entry. And then you don't, I mean, this might have been potential. I mean, I see some risk there, but, you know, we could disagree and I could be wrong and all these different things. So that maybe, you know, buying the retracement to the 21 and kind of using this area as a role reversal is maybe your second entry. Long if you're a bull, okay? Okay. You're looking at 1 minute, but it's fine. It's all the same, right? It should all be the same because you can't trade the 1 minute without looking at this 1 hour. I mean, you can, but you won't be successful in the long run. But what I'm saying is, as a bear, there is no doubt this is moving up. Reversed at a reversal pivot, bullish engulfing candle, higher low, higher high, higher low, higher high, higher low. You can't sell any of this. Not if you're risk averse. Hey, if you're a cowboy. Right? Won't it do right? So what are you waiting for? How about a double top lower low? Okay. With divergence, of course, because we've already talked about it, right? At resistance. Let's put this in order of importance. 1, hardcore resistance a blind man can see. Oh, no, I got to back up even farther. Macroeconomics, central banking policy, right? Falling interest rates, money outflow, increase of supply of Kiwi dollars in the market, valuation of the Kiwi falls. Generally speaking, when a central bank lowers interest rates and has the potential to continue lowering interest rates, generally the currency weakens. Right? Okay, right? This is the supply of money. This is the demand. Wow, I have to redo this. It was just too bad. Okay. Supply of money. Demand of money. I don't know why I put that D. I can't think. Okay, demand for money. Equilibrium price. Okay? Increase supply this way because this is the supply, right? So the supply curve moves to the right. This is supply 2. Equilibrium price, EP2, falls. My model predicts, okay, money's going to flow out of New Zealand because they're losing interest rates. They're losing money on bonds. Money flows out. It's less attractive, less competitive with foreign markets, so on and so forth. Increases the supply. Equilibrium price falls on the demand curve because demand is also falling. So you could even, less demand for that currency. You could even move it in here. And here you are. The value of the New Zealand dollar falls. Boom. Snap. That just happened. So this should theoretically, based on the models, fall. Most important thing. Second most important thing, resistance a blind man can see. Or woman, sorry. Okay? 786, monthly central, lower high kind of idea, because there's the top. So eventually, if this is going to get short, right? Next thing I want to see is the pattern. So now we're thinking this. And then third, this is just very interesting. This is divergence showing that as we hit that, look where it started to top out. Okay, up in here. As we got closer and closer and closer to this resistance, bulls took profit, took profit, took profit, took profit. Hopefully bears start selling, 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 selling. Okay. How long will it fall? Forever. Okay, Linda? It will fall forever. That's what a trend trader thinks. A trend trader wants to stay in the trend. And when you catch a good trend, it's beautiful because it just keeps paying you and paying you and paying you, right? So the trend is going to do this, lower high, lower low. Now, sure, we made a 786. That makes you pretty cautious. That's going to make us really nervous around that S2 pivot point, monthly S2, end of the year kind of thing. But as a trend trader, it will fall forever and ever and ever until it reverses. Okay? Now, if you say to me, well, Wayne, what would a medium-term target be? And I'd say, well, based on two things. The 786 predicts, right, at best, a 1382. Really, a 121.4 is my old story. Okay, I haven't taught this in 100 years, but let's do it. Got it. All right. So, and then I need to add 1.214. I'm going to call it 121.4%. Ciao. All right. So Leonardo Fibonacci, and I know you probably have never heard of 121.4. I'm self-taught, and what I did was I took 100%, subtracted 786, which gets you 21.4, and then added that to the 100 so that my first Fibonacci extension was balanced the same that a 786 is on the retracement. That's what I did. I know, so I'm self-taught, but whatever. So my theory of Fibonacci would be Leonardo's eyeballing this area. And then if you use pivot point theory, let's say monthly central pivot point's your top, M2 is your bottom, so it's there. So it looks pretty clustered. So, the end of the month looks like that, down at, whatever that is, 64. Okay? But this could fall for 2016. Why? Well, if the United States is raising interest rates and New Zealand's lowering interest rates, there's a central banking divergence, and, Kiwi dollar should fall. I know this is Kiwi Swissy, but, you get the idea, right? Cool. Alberto says, noob question, you're doing fundamental analysis on an hour chart. No, actually, I don't do fundamental analysis on a chart at all. Okay, fundamental analysis is the study of economic indicators as related to central banking policy. Okay, so what moves currencies, okay, the most important thing in the Forex market as a leading indicator is central banking policy. So how does a central banker make a decision on their monetary policy? They look at economic indicators like inflation, production, so on and so forth. They take that economic data and say, hey, we should adjust our monetary policy. If they adjust their monetary policy, FX moves. And then how is this policy different from other central banks' policies? And that will either attract money or retract or repel money. Okay? That's fundamentals. Yeah, That's right. New Zealand didn't say, wow, look at that MACD. We better cut interest rates. Yeah. So there you go. So don't, and by the way, thank you for the question. Alberto, where have you gone? So technically now, I'm looking at this as a downtrend. So Roberto says, why not use a 4-hour? All right, let's analyze it on a 4-hour. This is supposed to fall for 2 or 3 days. Okay, and everything else looks the same to me. This used to be resistance. This could be resistance again. If it's bearish, we need to keep it below that low. And the Alamo, did anyone hear me call it the Alamo? Right? You might be from Uzbekistan and not know what the Alamo is. So you should say, Wayne, what's the Alamo? If you don't understand my language, you need to ask so that we can communicate effectively. Everybody gets it? Last line of defense. Thank you. Last line of defense. If you're a bear and you don't sell here, you're not a bear. That's it. I'm a bear, but no. If you don't sell it here, you're just not a bear. Because if it goes any higher, it's not a retracement, it's a reversal. Okay? Davy Crockett survives, Davy Crockett's dead. That's pretty much it. Okay? So you're either Davy Crockett or Ozzy Osbourne, one of the two. Poor Ozzy Osbourne, an Englishman, was arrested, I don't know what, in the 70s. He was intoxicated. He was peeing on the side of the Alamo, which is pretty bad. You're drunk in a public place. You're peeing on a national landmark and treasure. But he was also wearing a woman's dress. So I think it was a pretty bad day to be in Texas. Yeah, he was wearing a woman's dress. Uh-huh. Hey, but it's totally normal in England. When in Rome. Yeah. Whatever, dude. It's a fact. That's a fact. All right, give me a currency pair, any currency pair. What do you want from me? How can I help? Yeah, Trump's going to ban all Englishmen from entering the country to protect the Statue of Liberty. Yeah. Gold, you know what? I haven't done gold in forever, but let's save that one. Because I look around at the charts and I'm like, yes, I just spotted something that might be interesting for you. Alberta. Give you the potential trend trade. You know, funny thing is, I did that 3 or 4 months ago. So I got an email today from FX Street that they have, 4 experts. They're getting together and they're going to give you their plans and stuff. So I'll leave it at that. But I already had a plan 3, 4, 5 months ago for 2016. And I've already shared it too. Right? So, yeah. But no, yeah, look, there's a special event for that. Out of respect to FX Street, go to the event, right? Boris will show you 2 Bollinger Bands, one above the other, and that'll predict the future. Cool. All right, so let's move into I think it's this one what I want to show you. Okay. You see what's going on in here? Now, I'll admit, these giant bullish engulfing candles are scary. I'll admit it. I mean, there's no doubt. They are event-driven, very scary stuff, because it could be the beginning of a change, right? But I wanted to take this opportunity to use a chart like this to explain something pretty simple like the moving averages. Fire for effect, right? Right, Chris? If one will do. This is what I learned about Dubai, right? They said, look, if 3 will do 10. They're like, we're going to build this marina. We're going to have 3 giant skyscrapers. Good, we like it, but only if you do 10 skyscrapers. That's how Dubai used to work. I don't think it's like that anymore. All right, so if 3 arrows will do 10, because that's what I'm eyeballing here. But let's do a quick thing. How many people have watched the 2-hour lecture I did at FX Street? How many people? Strategic and Tactical Forex Trading was the title. It's 2 hours long. I did it, I don't know, 6 years ago, 5 years ago. And I just bare my soul. Yeah? Maybe 100 times? Oh, appreciate it. Well, there you go. Thank you, admin. The world's greatest admin, I'm telling you. Every week, week after week, world's greatest admin. Just like that. Pachow. Thank you. Yeah. And I think it's a pretty good one. I haven't watched it, right? I haven't watched it in a long time, but I think it's pretty good. Right? I mean, almost worthy of selling. So there you go. So a very quick review here, how to use the moving averages. It's the same as I did in the video 5 years ago. Let's say it was 5 years ago. But 5 years before that, I was still trading the same way. So I don't know if you get emails about cool new trading strategy. You should buy into this. I haven't had a new trading strategy in 10 years. So which one do you want? The cool new trading strategy with the funny name? Or do you want the one that hasn't changed at all in 10 years? Which one do you want? Tried and true or new? Everyone's not sure. All right. Yeah. Yeah, proving it works. Well, maybe I'm just slow, right? Maybe I'm stupid or something. But yeah. But here we go. This is what I've been doing forever and ever and ever. A 2155 cross shows a change in direction for the market. At this point here, the market is bearish. And is certainly confirmed technically as it makes a lower low, right? Because before this move, the market was actually slightly bullish, but mostly sideways because of the lack of conviction of making higher highs. Because we know if you go all the way back left, this was up and down in a 100 pip range over the course of 7 months, right? But anyways, technically, a 2155 is bearish. That market is bearish. So this is where you say, I'm a bear. The way that you use the moving averages is when price comes back and retraces to the moving average, you sell. That's it. That's what the moving average is there for. And I was talking with some other traders and how they're using the 2155 or whatever moving averages they were using, but then for some reason they had to put a cloud on top of it so that the cloud looked like this. And they're like, see, I sold it at the cloud. Well, why do you need the cloud? Just sell it at the moving averages. Why do you have the moving averages if you don't sell at the moving averages? I mean, that's what moving averages tell you. So here, the market's bearish, and price is below the 21, so you're aggressive. And when it retraces back to the 4 hour, you drop it like it's hot. Yeah, everything's in the cloud, right? I'm like, why don't you just get rid of the moving averages and only use the cloud? Right? Like, why do you have two things doing the same thing? But whatever works, right? But I'd prefer you scale back. But that's how you use the moving averages. So if anyone's watched that video that I did 5 or 6 years ago, right? That's what it talks about, right? Up to the 4-hour 21, and then you should maybe cut the corner. And that's what I call cutting the corner. You go from the 4-hour, and you're assuming now, right? You're assuming this is going to hold. So it comes up into here, and what do you say to yourself? Aha! Sell zone. Or if you're Italian, sell zone. Okay? And you're like, but do you pull the trigger? You could. I prefer evidence that it's holding, because that's a giant bullish engulfing candle, right? Right? So you cut the corner and you say, well, if this falls, well, then the 4-hour is going to fall before the 4-hour. Right? And the 1 hour is going to, the 15 minutes is going to fall before the hour, and the hour is going to fall before the 4-hour. And if the 4-hour falls, then it might be too late, because now you get like, what are you going to do now? It's kind of late, right? So that's what you say is, okay, my hypothesis is that is a sell zone. Now, if you want to throw in price action, this is like bonehead easy, right? Okay? All right. So, but you're up here now at this point. What do you do so that you can get in earlier? Because you can't wait for a 4-hour 5A cross. It'll take 16 hours. And by the time it's happened, it's too late. Because you need to sell high. All right, so you cut the corner. You can go to a 1 hour now. So your strategy now is you're looking to sell in this zone. This is what you've identified as resistance for multiple reasons. Mean reversion, right? Returning to the moving averages. Roll reversal. Monthly central pivot, whatever. Sell at resistance. So you want to sell in here as close to this zone as possible. You don't want to start selling now down here, right? All right. So your first shot is you move over to the 1 hour. Now, your strategy is done. Sell somewhere in here. So once you get up into there, now you move to a tactical entry. Hour maybe? Can you see this? 5-8 cross. Okay. So maybe you're in here. How about a 15-minute lined up with how about a London Open? Wow, that would be awesome, right? Well, let's do that. Okay, let's look into this. Let me use my bionic eyes. Okay, so you're in your sell zone on your 4-hour. It's made a lower low. So it's a breakout type trade. It's retracing back to the monthly central, Fibonacci retracement, roll reversal, 4-hour 21. And you say to yourself, I would like to sell when new money comes in the market. It makes a new lower low. I wonder what it's going to do at the London Open. 5-8 cross. Guess where the London Open is? This is the exact candle of the London Open. What did the London boys do when they walked into work? Sell, sell, sell! Is that a coincidence that we could drill it down, blah, 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 and it comes down to the exact 15-minute candle of the exact London Open, and this thing drops like a ton of bricks? Total coincidence? Just complete, total random walk? it stopped at the monthly central, it stopped at the role reversal, it stopped at the moving averages, and then it began the actual drop to the minute that the big market opened, the London session opened. I mean, is there a coincidence? Is that a complete random walk, as Harvard tries to convince me every day, that the only way you can beat the market is taking more leverage? I'm like, I can predict the market pretty good, sir. Shut up, Wade. It's all a random walk. There's no way you can outsmart the market. Okay. Right? So anyways, what is the 773? It moved 77.3 pips. From here to the New York Open. That range was 77.3 pips. Okay? But what's the key here, guys? Okay, what's the key? Is it the 5A cross and the 15? Is it the stochastics? Is it the MACD? Should I add an ADX or a CCI? Should I have 9 Bollinger Bands? Right? Hey, when the emperor built the Forbidden City, it was all based on the number 9. So maybe if I had 9 Bollinger Bands, it would protect me from the evil spirits that steal my pips while I sleep. What's the key here? The key is I had a plan. Okay? That is the key. Because even if I'm wrong, it's not going to take me very long to realize I totally screwed up. That it went, oh, Wayne, how did you know it was going to break those moving averages? I thought you said the 21, blah, blah. Well, think ahead, dude. You start on the 4-hour, and you say, oh, my gosh, we just broke out of a hardcore range. Let's do it this way, right? Hardcore range. There's a bottom. Let's call this sort of a top. Breakout, roll reversal, sold at the convergence of the moving averages in the direction of the prevailing trend, at least on this time frame, with a fib, with a roll reversal, with a monthly central pivot, right? You don't see the monthly anymore because I removed it when I changed it. But, and it's all there, and we're way up here, and then you're waiting for the trade of the day, the first trade of the day. I'm serious. You can actually think this way. When the London boys walk into the office and boot up the computer and they're drinking their tea, right? They say hi to their buddies. Hello, hello, hello. How's the market, Roger? Right? And the computer boots up and they're looking for the first trade of the day. Please pass the biscuits. Quite right, quite right. Right? What's the first trade of the day? Now, look, London only trades $100 billion trillion a day. I mean, where's the new money? This is something I'm trying to drill into people every day. So if you hang out on my daily webinars for Traders Way clients, something I drill. Where's the new money coming from? If this falls, somebody needs to buy a hell of a lot of yen or sell a hell of a lot of dollars. Where's that money going to come from? How about the London Open? Right? This is something we call time of day. I mean, hugely important. But more important than all of that, we identified this the day before as resistance. Only 9 different reasons why, but 9 pretty good reasons why that is potentially resistance. Now remember, I said scientific methodology. Your hypothesis is that this could fall, it may fall, it might fall for all those 9 reasons. Now you need proof. So I think the Johnny on the spot, you're an amazing trader, top of the world type stuff, you take this. Okay? Not everybody's that good. So what's the easy peasy lemon squeezy way? London opens, makes a lower low, retraces. Which one's high risk? Which one's lower risk? There's A and B. Bear in mind, you planned this whole thing the day before. The day before, guys. You're thinking ahead. These little, tiny little tidbits is everything that changes your trading. Right? These little tidbits. Oh, the 773 when New York opens. Because I have like basically the London Open, the London morning is a session for me, and then the New York morning is a session for me. So in the London morning, it moved that. Okay. So anyways, A is a good trade because you only had a plan 24 hours before it happened. And you said, okay, I'm at resistance. I got everything I want. I'm hot to go, HOTTOGO. London's opening in a couple of hours. I see a 5A cross. I see the stochastics because stochastics is ready to drop. And you're like, this is it. This is my hour of power. Boom! Front run the London Open. Yeah, guys, I went through the news. There's nothing more important than what I'm talking about right now. Okay? So there's that. But you know what? You know what the one you should be getting, the one I want for you? I don't want you to try to be this smart. I don't want you to say, I'm so good, I'm going to short into that 21. Do you understand? On this time frame, that's death by self-mutilation kind of stuff. Because I just taught you on the higher time frame, this is bullish. You would have a cloud in there. So, Wayne, how do I get in that safely with the same trade based on the high time frame, but with much, much lower risk? And I say, now that is a good question, my friend. Let me tell you. You wait for it to break the breakout, you wait for it to retrace, and you sell the lower high. Now, if you sold at B, is there a radical difference in price? In this case, yeah, Turkish brings up, yeah, he's like, well, that's actually after the London Open. Yeah, and you're ready for it. Okay? There's not a dramatic change in price, is there, guys? See, one thing I've always tried to share is that there is not a penalty or a significant penalty, let's say, for being conservative, for being patient, for being disciplined enough to wait for the break and the retracement. And perhaps on the long run, you will actually stay out of many more losing trades because you're less aggressive. So even though you waited, I would venture to guess you'd be much significantly more profitable at the end of the year. Not because you made more pips, like Harvard says you can only beat them if you take on more leverage and you outsmart the market. I'm like, no. I'm taking the obvious trade based on solid technical and fundamental analysis, but I'm doing so at lower risk. So at the end of the year, I might let's say have half as many losing trades that I used to. I made the same amount of money on the winners. I don't want you to try to, let's say, take on more risk or leverage or hang on to, you only have 300 pip winners only, right? No, 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 no. The beginning to the key of your success is less losers. And you're going to have less losers because you're taking less risk. But look at the difference of A and B in price-wise. What is that going to cost you? 5 pips? You see what I mean? I'm just asking you to plan ahead. The whole point is that this was your plan yesterday. Then you say today, when or if we're up at resistance, if we're at the monthly central, if we're at the role reversal, if we're at the 4-hour moving averages, then at the London Open, when lots of new money is going to come into the market and move price, if I can get a reversal pattern in that zone, then I'd like to take the shot. You are now a successful currency trader. Can I get a big bear hug? Come on. Give Uncle Wayne a hug. Come on. Give me a big hug. Come on, I'm a big teddy bear. I mean, it's awesome, isn't it? I'm trying to give you, like, reality. Look, I'm not pitching you a DVD here. I just want you to be successful. That's my aim here. Right? Got nothing but love for you. I want you to succeed. How do you handle the time to wait? Some people just throw down moving averages, or not moving averages, limit orders, or they come to the market at times. So, like you can actually set your watch for times when the market's likely to move, and you're there. You look at a calendar for event strategies. I could even break it down where I'll say, all right, well, it's 8:50, time for the front run on the equity open. Okay, boom, we're coming up. There's news at 10, so we're going to look at a 10:34 swing, right? Then we're going to do some stop hunting, go into the London close, and then we're going to try to catch a swing to carry it through Asia, in particular if there is Asian news, like Chinese industrial production or something, carry that into there, and then the next day is London open again. And you can have it. You can have the whole thing scheduled by, I want to be in front of the charts now. I don't necessarily need to be in the charts there. Oh, you mean, how do you, oh, when you're actually in front? I work. One thing that I used to do like 1,000 years ago, and honestly, it's been that long in my mind. There was a time 1,000 years ago where I found the best thing to do during that time was play a video game. Just run around Call of Duty, and you're just, now I have 18 screens, right? So one monitors for playing video games, and I, boom, 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 power up, yeah, right? And then I just glance with an eyeball, boop. All right, I could just glance. I could see the whole world without even actually moving my. Right? Oh, nothing's happened yet. No, not quite yet. No. I mean, you're right. It can be an hour and a half, 2 hours. You're sitting there waiting for your entry. Absolutely, totally right. But generally, I'm working. I'm doing analysis. Here's what I probably am doing. I'm probably reading IMF reports or something. I'm just constantly reading and looking and thinking. I can have Bloomberg and CNBC up at the same time sometimes. I'm working with other traders. I'm usually mentoring one person, just it keeps me interested. Um, I'm just I don't know. Yeah. Yeah, play so yeah. Yeah. Yeah, my current mentor, he's fantastic. He's incredibly coachable. I teach him something, then he goes off and he works his butt off for hours and hours and hours and hours and hours and hours, comes back and he's done his stuff and he's got it and the guy's solid. I don't know if he's in the room. Take a bow, dude. Take a bow if you are. But, to me it's all about sharing. I mean that's it. So, sharing. So, anyways, check that out, man. Up to the 21. Pachow. Yeah, I guess he's not in the room. But he just sent me an email. That's why I thought he'd be in the room. He's just reported his account's up 60% for the month since I started mentoring him. So anyways, bravo to him because he works his butt off. He takes the advice and he's like, wow, this is way different than what I'm used to. This, but he does it. That's hardcore. That's really hardcore. It's so, again, how some people say 80% of it is just showing up? I want to write a book and the title of it's going to be 80% of it is not sucking. And then the other 20% is blood, sweat, and tears for years, right? So anyways, good for him. He's earned it. Okay, after the 4 hour, expect a higher low. Well, look, if you're a bear, what do you expect? What's your plan, Stan? Right? Oops, where's my drawing tool? Bump, 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 right? That's what you're hoping for. Is this support? Yeah, you got to kind of worry about stuff like that. So play it as it goes. Yeah, Pele says bank minutes. Yeah, I do. I spend a lot of time on central banking websites. Like, go to the South African website. Read their last meeting minutes. Do I trade the South African rand? I used to 1,000 years ago, but no, I don't really get into exotics that much anymore. It's a great commodity currency, and there's some big trends going on there. But I'm just, I'm busy enough with the majors that I don't really need to go crazy, right? So why would I read data and reports and watch videos? Actually, I watch videos of South African central banking meetings and I read their reports and stuff. Why would I care if I don't trade the South African rand? Anyone want to venture to guess? First of all, I want to look good in front of the boys. What else? Gold, knowledge, macroeconomics. Andy's getting closer there because I can guess if South Africa is doing good or bad. I can guess how that fits in the global macroeconomic scheme of things. But yes, there you go. Manny brings it up. In their report, because they're an exporting nation, because they're a commodity nation, they rely on other economies quite a bit. And so they have their PhDs and their economists, and they crunch the numbers both domestically but internationally, and they'll talk about what's happening globally based on their analysis and their insights. And they will say, oh, well, because of what's happening, because of what Janet Yellen's doing, because of what Draghi's doing, because of, the People's Bank of China because of blah, blah, blah. And I get to read the stuff, and it's fascinating. Some people wake up in the morning and they want to read the Wall Street Journal, which is just a reprint of Reuters press releases. And you find out on Fridays, University of Michigan Consumer Confidence Report, it came out 0.3% versus 0.2%. Like, really? I gotta move my $1 billion position now because of what I read in the Wall Street Journal. Right? No. I don't care about any of that anymore. In particular, there have been times when what I've read in the newspaper were actually completely, totally wrong and dangerous because it was completely flat on its face. 100% couldn't be wronger. So I'm like, that's it. I'm never even going to look at another paper again. But if you're sitting there reading the meeting minutes or the economic analysis, how about the ECB staff forecasts, IMF World Economic Outlooks? Wow. Right from the PhD's mouth. This guy or gal have dedicated their life to learning how to gather intelligence and then formulate, the analysis based on it. And it's fabulous. So, in all honesty, I have at least 1,000 PhDs, economists, and quants working for me. And I don't have to pay them a penny. Because they work for the Reserve Bank of New Zealand, or they work for the IMF, or they work for the Bank of Canada, and they tell me their information. I have PhDs working full-time jobs at the St. Louis Fed, and then they report to me on a regular basis. Awesome! Yeah, anyone but the jerks at the S&P. Very well said, Andy. I'm still bitter about that. I went on a tirade just the other day, and I'm like, I can't believe it. I'm still mad. I'm not an emotional person, but I don't like betrayal. I reward loyalty, and I don't forgive. It's a weakness of mine, I guess. I think about things for years. Yeah. So anyways, I think we've run out of time. It's a Friday. I know the moderator likes to go out dancing in the streets. But in all sincerity and stuff, I hope you guys know I really do want you to succeed. I really do I want to hear your success stories. I hope you make at least an extra 1,000 pips from working with me. And that's it. That's all I want from you is your success stories. Or questions. How can I help you find success? And I hope you believe that's true. So if so, I'll see you next Friday. And then the Friday after that is the Christmas holiday, so that's probably not going to happen. And then the Friday after that is January 1st, so I think that's not going to happen. So so really next Friday is our last one of the year. And then I won't see you until non-farm payrolls, right? Which is probably, what is that going to be, the 7th of January? So, I hope you're here on Friday. We have one more year, huh? Or one more, yeah, and after the Fed decision, you can trade that with me if you want. I'll send you an invitation. If that's all right, you're welcome to. I'm happy to work with you at that period. Okay. So I'll see you, I guess, that Fed meeting, and then I'll see you Friday. And then Happy New Year. So peace on earth. May the pips be with you. May your profits be above average. And thank you very much to FX Street and, in particular, our fabulous moderator of the year. Have a wonderful weekend, huh? Thank you for your efforts and your hard work and not for giving up, right? Thanks for not giving up. Yeah, Luis. Just make sure they're real Cuban cigars and not Mexican cigars, huh? Can't tell you how many times I've been to Mexico and my buddies go into town. They're like, Wayne Lake cigars. And they're like, oh, look at this. I can buy Cohibas for only $1 a stick. Uh-huh. And then they're sitting there smoking their cigar, and only one half of it is burning, and it smells like a barn. I'm like, uh-huh. What is that, goat? Do I smell goat? Good job on the $1 Cohibas, dude. You know, it's funny though, but you can't be mean because they're trying to be like super awesome, right? They're like, yeah. Hey, I just adopted a dog, a Scottish dog, beautiful dog, a Cairn Terrier, sort of Western Highland Terrier. I'm of Scottish descent, so that's my land. That's the McDonell land, my clan. This is my clan dog. I've actually found the house that like my great 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 grandfather built by hand. It's actually on record. They have the records of it in the nearby town. I think it's in Inverness. And they're like, he built it by hand, the stone house, the view of the water, and the giant hills on either side, so he could get married. And it was like it was required. So he built the stone house, and then he got married in the house and had his children there, and just fantastic. No, this is Scotland. Yeah, but I guess like most Scots have never actually been to Scotland, right? I was born and raised in Canada, live in the United States. I'm sure if you're Scottish, you're like rolling your eyes. Oh, great. Here comes another another tour bust. Oh, really? You're a McDonell? Hmm. How amazing. Welcome to Scotland. But anyways, you look at this dog and you think Scotland. Yeah. Well, in Georgia, maybe. Well, there's actually a lot of Scots in Georgia, actually. Um, but they're Scottish hillbillies. So I'd still be worried about the haggis. Yeah, no, it's true. True that. I used to actually drink almost exclusively Scotch. It started with Canadian blended whiskey, and then as I made more money, then it was Scotch, really nice Scotch, right? In fact, I could walk into Waldorf Astoria, sit down, and the bartender brings me an 18-year-old Macallan, and I don't even have to ask for it. But Then I discovered what the Scots made when they got to this part of of America, Georgia, Tennessee, Kentucky, and they started making bourbon. Oh, snap. I haven't had a bad bourbon yet. McLeod, huh? As long as you're not a Campbell. Arr! I'll get you yet, you Campbell. Everything. I drink everything from top shelf, bottom shelf. I haven't found a bad bourbon yet. You're like, 3 liters for $3? Yeah, I'll buy it. Still good. Because they filter it and all that kind of stuff, right? There's a process. There's a difference between Tennessee whiskey and Kentucky bourbon and whatever. It's still good. I'm pretty impressed. Yeah, the $3 bourbon. $30 cohibas and $3 bourbon. Yeah, well, what can I say? S&P 5 and S&P 500 at a reversal point. I'm gonna look for a breakout here. Think I'll eyeball that today. You might be looking at a different price on oil. I'm looking at the cash market, not the futures contract. Have a wonderful weekend, guys. Cheers.